Good morning, guys. Welcome to this Monday, February 2nd, 2026. And so we're starting February, month of February, second month of the year. We are looking at the market, which in the overnight just took a dump. That started heading lower. I was looking at that thing before I went to bed. It's like, goodness me, this doesn't look good. So I was expecting them to be way down in the morning, but I guess they found some support and started grinding back up again. But man, that did not look good last night. Starting off like looking at the Sunday night. Oh man, this is just not looking good. They were trading down here at the 68, 70s down here at the lower end of support. Man, I was getting a little bit concerned about that. Look at the found support. It took us a little bit lower since I last looked at it, down to the 68, 70s, and then back up again. And the London session has been to the upside. So we're kind of back up, not quite where we closed from Friday, but a bit close. So let's see. I mean, a couple of days of selling here. Last day of January, first day of February. So all right, we'll see if there's going to be further weakness here. We're still in earnings seasons. Last week we had an announcement came out, unchanged rates. We had big tech earnings. That was across the board pretty good. A little bit of weak guidance somewhere here, and a little bit miss on how much growth they expected. And you saw violent punishment on Microsoft for its little baby miss. So it is sometimes you just have to scratch your head and wonder what happens when those algos kick in and just flat out sell everything. So, but starting off today, we ended Friday, started off range bound, and I think we may be able to start off the same way. I would still eye the short side of this a little bit, given the sell-off Friday, the sell-off in the overnight. I'm thinking that it's going to be a couple of key days ahead of us if they're going to start taking this lower, or we're going to be able to hold these lines. So, at one point we may get a correction. So it's just it feels like we're churning here for quite a while, and if they can't take it higher, at one point most likely we're going to get some profit taking or some rotation. It's been some rotation going on already. I mean, you see some of these stocks are big techs are getting kind of hammered on a regular basis, and other sectors are perking up. Not very interesting sectors, but still, it's a little bit of leadership change, I guess, in the stock market. But it's trying to chase that is just anyone's. You have to be a very active fund manager to do that, and do a lot more research than frankly I'm willing to do. So I'm just staying with my ideas on the overall kind of trends which are going on, the AI trade and what goes with that. I think that's going to be the big trade for the next century, or not century, a decade, at least a decade forward. That's going to be a pretty key trade, and that's going to. There's a lot of things are going to be changing there, so it's a little bit of rotation back and forth. I'm not going to worry about too much. So, but I think that's going to be the thing which holds this together. If that trade holds on, if they're going to be a little bit more correction or rotation, we may see a little bit of rotation down here, and it's some sort of a correction. News this week. We have today at least PMI at 945, ISM at 10. That's about it. Nothing at 8:30. Tomorrow we get job opening. Not much else going on there. We have a little bit going on Wednesday. And then on Thursday, we have a little bit, and Friday, employment situations. Yeah, Friday we get an employment report, first Friday of the month. And that's going to be a current month, I believe. That's going to be for the January month. So that's going to be something a little bit more current than catching up from the shutdown. So we've got a little bit of stuff going on this week, but we're still getting earnings come out, and I will just look at just watch through the earnings. So far, the earnings have been pretty good, good enough not to cause any sell-off in a bigger way, like consistent market tanking on us. So starting off range bound right now, still eyeing that short side, watching for potential retest at that low, maybe lower. So I have a little leaning a little bit to the short side, but technically we're kind of back where we started. So we can start range bound. I would watch these lower support areas, the 6900s or 68. This is not 68. I would say 68.95. I dropped it a little bit. 69.10. So these two support areas, if they come out, I would be more aggressive on the short side. I think we are the weakness is kind of punching through at that point. So looking to buy weakness, 69.30s, 20s, 10s down to the 68.95s for rotations up. I think these two, the lower ones, the 69.10 and 68.95 are the ones to really pay attention to. Those are where we had to change our bias and start thinking about the short side a lot more aggressively. And on the way up, looking for short setups against resistance, 45s, 50s, 60, I would say 65 on that one, 75, 90s and 95s here. If they start trading above the 7,000s again, I would be a little bit more aggressive on the long side, I think. But if you trade up in this upper area, I would just look for short setups against these resistance areas. And if you have a little rally going on, if you just don't sell into one of these, just look when they start breaking out of them. That's when you have the opportunity to get on a potential long trade if you're trying to ride it up to upper levels. But as I said, I'm going to be a little bit less aggressive on the long side. The only caveat with that is that we had a nice retracement from the low, so we've been retracing pretty good on the long side here, right back up, and that may continue. It may keep going up here. We may test this 69.65 mode from Friday. That could be an interesting spot to get short. Also against this upper edge, you get a 69.75. So those are the areas to kind of pay attention to. If they take out these upper areas, the 69, 90s, 90, and 95, I would be a lot more aggressive on the long side. But that's how we get started. We are in the range right now, going back and forth. The two kind of the wild swings the last couple of days got me a little bit worried, but elevator down, another overnight to the downside. And I would be a lot more concerned if the February starts off with a big move to the downside. That would be kind of setting the stage up for a pretty shitty February. So we'll see. But at this point, that's how we get started. So primarily range bound, a slight bias to the downside just to see if they're going to try to run this lower. And we have these two levels to key in on, 69.10 and 68.95, right? And then on the long side, if they for some reason take out the 90s and 95s, yeah, then on the upside, then yeah, they'll be more aggressive on the long side. But it could go either way. I would probably favor the short side given the last couple of days of action, and also the fact that we've been stalling here at the upper levels, have not been able to make headway on the upside. So just eventually you're going to get someone covering the trade. That could be ugly for us. Another thing which happened over the weekend is that you had this crypto trade. If you watch cryptos, absolutely collapsed on Sunday. It started happening on Saturday. Started heading lower in a big way below 70,000 for Bitcoin. Coinbase is taking it on the chin this morning as well. And usually crypto is like a risk-off kind of thing. You get the sense that there is some risk-off sentiment out there when they start selling that. So, and that also adds to my little bit slight bias to the downside. But you can see NASDAQ here. NASDAQ is a lot weaker than the ESs. They took it quite a bit lower, and the tech stocks are getting hammered a lot harder than the ESs. They were all the way down here at the 25,200s before they found support, and now we're almost back up again, but not quite. We've got a way to go before back to where we closed on Friday. So, yeah, all the tech stocks it's starting off with big red numbers on them. It doesn't look pretty, but that's how it goes. Nice retracement though from the lows. So we'll see if they are going to hold on to this. But I'm going to start off on the NASDAQ with a slight bias to the downside until they trade up above these two resistance areas, the 530s and the 575s, these two resistance areas. That would be a reverse retest of Friday's low, day session low. And so this is Thursday and Friday. So you have two of them here, which are both way down. bouncing off these resistance areas, and the overnight took it out. Now, if they can't get up above these two, we may see further weakness on the Nasdaq, and we may see Nasdaq lead us lower. That wouldn't be pretty, but it could be very, very well happen. So I'm not going to give it a little bit of room this morning since we're starting off a new month. They closed out January. They started off February with a little bit of selling. Let's see if that selling is going to start building throughout the day here into tomorrow. So ES, we started off range bound with a slight bias to the downside. Nasdaq, we're going to start with a bias to the downside already. So looking to sell strength at 510s and the 540s for rotations down. Looking to buy weakness with a lot of caution. I would look to buy against the 470 you're trading there right now, so that's pretty aggressive. But against that 420s and the 330s, looking to buy against these two. If they take out the London low, I just not try to buy anymore. I'm just gonna try to stay on the short side. So I would start, as I said, looking to sell strength. If I get a bit of strength, looking for short setups. If I don't get it, to start just taking this lower. As they take out one of these support areas, potentially try a short trade, try to get on it and see if I can stick with it. So we'll see how weak that's going to get. But it doesn't look as even close to as strong as the ES does. Now, finally, if they get up above these areas, the 510s, or what is that? The 530s and the 570s, these two resistance areas. Yeah, 530s and 570s. To get up above them, we may be in good shape to retrace a little bit further to the upside. The attractor is up here at the 690 to 700, so not too far away, and that gets us just back to the middle of this distribution. So that's how we get started on the Nasdaq. Let's see how that really develops. So, but we have the makings for a little bit of a sell-off. We'll see if the market's going to be holding on to their gains here from the overnight. But anyway, so yeah, Nasdaq looked pretty ugly in the overnight as well when I started opening here. And then finally, on the bond side of things, it's the same story there. We are going back and forth in the range, not much going on there. Just traded the same way, range bound trading. So at this point, they're going to sell strength, 1506s, 1510s, 1516s. They're going to buy weakness, 15s, 1426s, 1420s for rotations up. Maybe down to that 1412, but pretty much a fairly tight range. Just look to buy weakness, sell strength. In the bigger picture, they're not doing much. You can see this distribution is getting really boring. It's just a big blob. But that just tells you that market has come to balance, and there's nothing really which is spooking it, nothing really which is causing the long-term rates to come down. In other words, the prices go up on the bonds. Hasn't happened either. So they're pretty stable where we are right now, and stable bond market usually pretty good for stocks. You see bond markets start moving, I would be a lot more concerned about what's happening and what's going on in the economy. The only thing we have going on otherwise is the gold trade, which is pretty crazy. They're up to 47.70 right now, or up or down. I actually closed down my chart because it gets too freaking crazy, and it's so much range and so choppy. It's like pointless to try to make it visible in any good way. So I just kind of left it away. You can compress it and aggregate it a lot more. It just gets you get a little bit better perspective. I figured I'm just going to leave it off there. It's just too crazy right now. But gold is trading at 47.70. Oil came down nicely. So if you want to pay attention to oil, that's I track that on an F2 here. You see they were trading up. Now they're coming right back down to 61. So a few bucks to the downside. We'll take that. And then we'll see what happens. I think the biggest geopolitical concern out there would be if something happens with the Iranians. That would be like a short-term blip in the market. Some sort of a sell-off, quick sell-off is what I would expect at that point. But that would be as the market reaction to a geopolitical event. So we'll see. That could be hanging in the wind. But other than that, the earnings season is still upon us. So there's still earnings coming out for companies. So you just have to kind of wait and watch and trade what we see. Alrighty, guys, we'll wrap it there. So good trading. I'll see you back at 11:30 and beginning this month. Let's see how it goes. Good trading, guys. Oops, I can't spell. Good trading. See you back at 11:30. Never.